They say that gold is a store of value, and throughout the centuries it has proven this time after time after time, just like it is today. Right now, gold is selling at all-time highs in more than 72 different national currencies. I want to show you this article. It's an early draft of an article that is being written by Alex Trudeau of goldsilver.com, one of the researchers, writers at goldsilver.com. And it's, about how you can buy gold at a 25% discount if you're buying it in US dollars. Because it is, ounce per ounce, it's 25% cheaper for us in the United States than it was in its 2011 high. But for people in 72 different countries, if they have dollars instead of their own national currency, they're getting an even steeper discount than that because their currency has lost value against the US dollar. And like if you're in Canada, gold is hitting record highs in Canada right now. If you're in Australia, gold is, way up in Aussie dollars. Now, these are not Banana Republic, Mickey Mouse, Monopoly money currencies. These are some of the these are large, stable currencies. These are some of the best, most respected fiat currencies, if you can respect any fiat currency. Personally, I have contempt for all of them. But if you go to one of those Mickey Mouse, Monopoly money fiat currencies, what you see here, this is the Argentine peso. I don't mean any disrespect to anybody from Argentina, but when any country does this to their currency, what they're doing is stealing from their own population. They're transferring the purchasing power, the wealth of the citizens of that country from the public to the government. Whenever you look at a chart of a price of gold or a price of anything else, if you flip it upside down, that's the value of that currency measured in gold. And so if you just imagine this upside down right here, the Argentine peso is dropping like this and then just falling off the bottom of the chart right here. That's what's going on. That's the value of their currency. And that's the purchasing power in goods and services. So they have raging inflation right now with prices changing dramatically. But if you look at this, the 2000, here's 2010, so this is 2011. So the 2011 peak in the gold price, gold is up about tenfold. I believe the Argentine peso, since this chart began, has dropped more than 93% against gold. Now, in US dollars, however, it's still 25% below its all-time high. And what's interesting is it just busted out of this zone of resistance, it's called. And so now that it's cleared that, it really hasn't got until you get up to about $1,700, there's not a whole lot of headwind for gold. But right now, in US dollars, gold is pretty much selling at a discount. It really is doing its job of storing value. And the thing is, this is a list of all circulating currencies, and there's 180 currencies, but there are only 100. When you exclude all of the currencies that are pegged to another currency, it leaves only 130 unique currencies that have their own values against each other. Now, this is a ridiculous, stupid system with 130 different floating currencies, all bouncing up and down every day, every minute in value against each other. It's crazy. One day, the entire world, if you remember the movie The Matrix, and there's this portion in there where Neo wakes up out of he takes the red pill and he wakes up and he opens this pod that his body is being stored in and looks at reality for the first time. There's going to come a day where the entire world sort of wakes up to this fiat currency scam, when we all realize how absolutely absurd this whole thing is. And that's really when the whole thing starts to fall apart, is when everybody starts to see how wealth is being transferred from them all the time. I mean, prices would not go up if the currency did not go down. All fiat currencies go down in price relative to real goods and services, And the main one that they go down in price against is gold. This was happening even when we were on bimetallic standards. This is the Coinage Act of 1834. And in the Coinage Act of 1834 in the United States, we had pegged in the Coinage Act of 1792, we had pegged the gold-silver ratio at 15 to 1. So we pegged the dollar was defined as a weight of silver, and then we broke down through 15 to 1 how much gold that would equal. And so we had the value of the dollar measured in gold. But it wasn't the same as the ratio in England, and so there was an arbitrage opportunity, and one metal would get exported and the other metal would get imported, and you end up with only one metal circulating at that time, and it creates problems. This has never worked when they try to peg things like this. And so we had to change it to 16 to 1. And what's very interesting, gold used to be $20.67 an ounce before the Federal Reserve. After this Coinage Act of 1834, it was established at $20.67 an ounce. So if you take that $20.67 an ounce and look at the percent change from to today, the dollar has lost 98.52% of its value. 98.52. That means there is only 1.47% of the dollar's purchasing power left since the Federal Reserve's inception. They've done a great job of destroying the currency, because that's what any central bank's job is. It's to destroy the currency over a long period of time. But things progress slowly until the day they don't. And then a lot of these types of things start to happen very quickly. The dollar has just been sort of bumbling downhill, going over this rock and that rock, but it hasn't gone over the cliff yet. But you know what? There's going to come a day where it does. Now, if you want to buy gold at an even steeper discount than the 25% you're going to be getting it at if you're purchasing it in US dollars, what I did recently and what I've been doing for a number of years is buying mostly silver, because right now the gold-silver ratio is close to 92. In other words, silver's price is 1/92nd the price of gold. It takes almost 92 ounces of silver to buy 1 ounce of gold. The average throughout since the 90s here is somewhere around 60, something like that, 65. If you go back 100 years, it's 45, and it really should be something like 15. That should be the real gold-silver ratio. Right now, silver producers are operating at a loss, most of the major silver producers. But you can see here that in the last great bull market, the average was in the 30s, and it went below 15 in 1980. It went down. This chart here doesn't have the intraday information, but it touched 30 in 2011. Right now, it's at about 90, 92. So if it's at 90 and it goes to 45 and you sell your silver and you buy gold, you just got twice as much gold as you paid for. So if you're buying in US dollars and you buy silver now and you convert it to gold later, you're getting a lot of gold for your currency. And one day we're all going to wake up and everybody is going to open their pod at the same time and discover that we're in a world that we didn't really realize that we're in, that there's this big, huge illusion going on, this scam, and it's the fiat currency illusion. And when that illusion goes away, that's when all of these things correct. That's when gold explodes. That's when this gold-silver ratio drops. And that is potentially when this fiat currency scam ends. Thank you very much for listening, and we'll see you next time.